It's time to awaken your inner traveler and zip around the world as money is sent to the people who rely on it. This is Money Travels, presented by Visa. I'm Indre Viscontis. Who among us hasn't fantasized at some point about leaving all our worries and responsibilities behind and escaping to a desert island or just jumping in the van and not looking back? Well, Kennedy Reynolds actually did it.
I have 4 kids, and my husband and I decided that we were going to kind of finally fulfill this lifelong dream we'd had to put them all in a van and travel around North America. When I was pregnant with our first child, my husband and I were just sitting there talking about, what do we kind of dream about with this child and this kind of crazy transformational thing that's about to happen to us. So we set this deadline. Okay, by the time he goes to kindergarten, we will have lived abroad or traveled abroad for a year. And we had some plans in motion, and then COVID hit. So we kind of put those plans on hold. And then we just kept on putting on hold and finally asked ourselves, there's never going to be a perfect moment. So let's just go for it. And we took some time to make a budget and, decide kind of financially what we needed to have in place to be able to do it comfortably and all those things. And so we did. We sold our house, our car, all of our furniture, and we put our kids in this van and we rented short-term rentals all over the United States and up into Canada. And I homeschooled for a little while, and it was an absolutely incredible experience.
Welcome to Money Travels, presented by Visa. On this podcast, we follow the money as it zips around the world, enabling our fellow humans to survive and thrive. And we talk to the experts who are building the tools that will transform the next generation of money movement. Years into the FinTech revolution, many people still struggle with money management and learning how to use all these new tools at their fingertips. And with money going digital in many instances, how do we teach our kids who really benefit from a tangible environment financial literacy? In this episode, we're going to explore some ways to bridge the gap in knowledge for kids and adults alike. We're going to talk to Louise Hill. She's the CEO of GoHenry, whose goal is to make every kid smart with money. The app introduces financial knowledge and helps shape kids' behaviors in positive ways, making it easy for their parents to guide them in the process. GoHenry shares this mission of financial literacy with Visa. So we're going to dive into GoHenry's relationship with Visa Direct that enables the near real-time transfer of funds from the parents to their children's accounts. But the financial literacy journey doesn't just stop at 18. GoHenry's new parent company, Acorns, has products that can help improve financial literacy for adults too. They recently launched the Mighty Oak card with Dwayne Johnson in the US, and it has features that allow adults to save and invest and learn a little bit along the way. And that's where Kennedy Reynolds, who's the Chief Education Officer at Acorns, comes in to share with us how that mission meets the goals of global financial inclusion. Here's Kennedy again, fresh from her year-long road trip. There are so many ways in which this could go wrong if you're selling your home and your car and all your assets, and then you're going on the road, you're going to be working remotely. So how do you think you were able to keep everything on track and make it so successul?
Yes, a lot of things could have gone wrong. Some things did go wrong. It was not like the seamless, we weren't kind of, holding hands running through the forest the whole time. So yes, some things went wrong. It really helped for us to sit down and kind of go through, okay, if we're going to make this type of change and we're going to, be paying for these rentals and kind of pay to go have these experiences. And that's a trade-off for these other things like a mortgage and some of the things that we were going to be letting go of. How does that work? Do we feel comfortable with this? We were both going to be working remotely. So, can we set up an infrastructure where we feel comfortable both being able to maintain and thrive in our jobs at the same time that we're doing this? So we went through all the scenarios. We tried to plan as much as we could. To be totally honest with you, I'm not the greatest planner. So a big part of me just was like, we'll be fine. And for the most part, we were, but having some of those, like the core pieces, the budget, the kind of safety, how can we make this as comfortable as possible, recognizing that there's going to be quite a bit of discomfort having all these kids in a van for extended periods. we answered some of those questions and we kind of left the rest up to we'll figure it out as we go.
So, with the inflation, what it is, with what seems to be a situation in which you might have a lot of unanticipated costs, there could be medical issues that you need to suddenly pay for if you can't get to a, in-network hospital in time, or your car might break down, or there could be an issue with a house you're renting. A lot of these unanticipated expenses, how did you manage and did Acorns play a role in kind of allowing you to figure out what cushion you needed, how you might navigate these unanticipated costs, and, how that's different in an era where prices just keep going up, it seems?
So the most important thing probably was that we had, an emergency fund, and Acorns absolutely plays a role. We have an emergency fund with one of the highest APYs at 5% through Mighty Banking. So that's huge, because then, like you said, I actually did have a child get sick when we were in Wyoming. In the middle of the night, we ended up at the ER doing chest exams, and that was an out-of-network expense. So it was really, really helpful to know we had this cushion. Having that emergency fund is huge. I would recommend it to anybody, and kind of backing into what that needs to look like based on your living expenses and what you kind of think might come your way.
And I imagine for someone who is more, I might classify you, instead of not a great planner, maybe somebody who is more spontaneous.
Thank you.
Open
That's
to
a
new
better
experiences.
Way to put it. Yes, thank you. Yes.
But for someone like that, it seems that, having a budget and that cushion is really pretty critical.
Yes, and it also really helps to have something like Acorns, which makes it so easy to just distribute your funds, right? The way that we have paycheck splits, where my paycheck comes in and I'm automatically distributing it into the accounts where it needs to go, checking, investing, an emergency fund, my children's Acorns early accounts, and I'm not even thinking about that. So in the build up to this travel year, we were conscientious about some of the expenses that we were planning, but we also had this incredible machine working in the background, distributing funds where they needed to go so that, we could focus on some of the other things.
As Kennedy said, this kind of complex plan requires a lot of little steps to come together. So how do we teach kids to do it? I spoke to Louise Hill, co-founder and CEO of GoHenry, to discuss what it means to help children become financially literate in the current landscape.
As a parent, I was faced with my two kids downloading music for their iPods from my iTunes account without a clue that they were spending money. And I started talking to other parents and realized that we were all having similar problems. And that's really where the idea started, realizing that there was a lack of financial solutions for families and young children and teens in what was becoming an increasingly cashless society. So together with two other parents, we set out to create a service that would empower young people with the freedom and confidence to use and understand money in a safe environment. GoHenry data shows only 10% of 6 to 18-year-olds are actually spending in cash. So life just isn't about counting coins in a piggy bank anymore. Kids need to understand how money works when they can't physically see it. So whether that's buying things online, whether it's transferring money to friends, using banking apps, whatever that is. And I think something really interesting that's come to the fore is that children and teenagers are realizing that more and more. We recently conducted research with our customers showing that 42% of primary school children, primary school, are worried about leaving school without money skills. And when we asked them what kind of money topics they would most like to learn about, one of the most popular was how to use a bank account. And to me, the fact that children want to learn something seemingly as simple as how to use a bank account, and that is a digital bank account, shows that financial literacy really needs to focus and incorporate more digital elements, starting with the absolute basics.
One of the challenges, of course, is when things go digital and there isn't something tangible that kids whose brains are still developing can really manipulate and use and see move from place to place, it can be hard for them to, in the abstract, understand what's going on. I just had this experience. My daughter's in kindergarten, and I came and gave a presentation at her class. And in the midst of a story, I sort of said, well, there's this girl and she wants to buy a ring. And, what if she didn't have the money to buy the ring? Like, where would she get the money? Like, what would happen? And of course, they were like, well, she would just use her phone. And, well, what if there was no money on the phone? There's always money on the phone. It was just like, to them, it was, and I understand, of course, that's their experience. That's their real world experience. But can you address this idea then that kids might not have the cognitive maturity to understand the difference between something that is concrete, say the actual dollars in their hands, versus more abstract as it would be in the digital economy?
Oh, but they absolutely can. And I think it's you can enable that by bringing it to life for them. So, some of the things that we do within GoHenry is every time a child spends money, they get a notification. And, for a very young child, that might be on the family tablet at home. And unlike a standard bank account, we will say, I'll give you an example. You've just spent £2.99 at New Look. You've now got £3.26 remaining in your pot. Or you just tried to spend £2.99 at New Look, but that's more than your weekly spending limit set by your parents. We bring that to life with real-time interactions and very much through behavioural nudges and information about the consequences of decisions. Mm-hmm. There are ways to bring that to life and make it meaningful and understandable for the different age groups. And that's key. We offer services for parents with kids from age 6 all the way through to 18. And obviously, mm-hmm. we have to tailor our content to the age of the child.
Can you give us some examples of how you address these different developmental stages?
A very simple example to give you is that when a GoHenry child reaches 13, that there's almost a graduation and they move into our teen services. And we offer a teen look and feel to the app. Mm. It unlocks new teen card designs that they're able to choose and additional features. So, for example, if they have a part-time job, their employer can pay their wages direct into their account. They can send and receive money to family and friends, so peer-to-peer money movements, all within the oversight of parents, all within the limits set by their parents. But it gives them something a bit different, a bit more grown-up. It lets them gain more digital skills and more financial independence while still having those safeguards and guidance.
Is there a way to track the success of the actual financial literacy, almost education component? So what I'm thinking of is, it's really easy for anyone to overspend on a credit card. And I imagine, of course, a child who doesn't have a fully developed executive functioning brain, that's even easier. But how do you track whether the children who are using the app are learning and that it's effective?
When we first launched, we provided the tools of a card and the app and the basic services. And later on, we added money missions, which are in-app digital mini money lessons. But I think to start with, Gen Alpha, the youngest generation coming through now, they are savvier than previous generations. They've had such early exposure to technology. They're more comfortable with it than previous generations. I know Gen Z has often been called the first digital natives, and I usually say, yes, they're the first cashless natives as well. But that comfort with technology means that they are more comfortable with translating real life into the digital environment. We commissioned the University of St Andrews in Scotland to do some research into whether children really were learning when they were using these tools. And I have to say, I mean, with some fantastic results, the university was able to show that kids who'd worked their way through a series of money missions were saving 50% more than GoHenry kids still, but GoHenry kids who'd not done the money missions. And even 3 months after they'd finished that level of money missions, they were still saving 30% more than children who'd not done the money missions. So we've got some really good indicators that, really good measurements that show, yes, it does have an effect. And I think really the proof of the pudding for me, I might be CEO of the business, but I'm also a parent, and a lot of what we do and we develop is to help parents teach their kids. 92% of GoHenry parents say that their kids are more confident with money after 6 weeks of using GoHenry. So I think that hopefully speaks to the fact that we are having a genuine effect.
It reminds me of the marshmallow test, which is this kind of, maybe a little overhyped and overinterpreted test of where if you give a child a choice between 2 marshmallows later or 1 marshmallow now, that is a good predictor. The decision that they make is a good predictor of whether they can succeed later in life. Can they delay their gratification for their future self? And I think, when I imagine what GoHenry, those money missions are doing, is they're essentially initially rewarding the child for doing this delayed gratification, for the savings part of it, which I think in a child's daily life is actually really hard to do. It's really hard for a child to feel good about saving money.
It is, yeah. I'm chuckling as a mum, sort of recalling some of the things my kids have done over the years. But one day when we have more time, ask me about 26 bottles of nail varnish. But that was my daughter. But it's absolutely true, and there is it's widely accepted. There's a very frequently quoted study from Cambridge University that showed without question that children's money habits start to be formed at the age of 7, and it's striking. It's getting in there young and starting to talk to them about money and starting to, either give tools like GoHenry or just talk to your kids about money. Just give them some regular pocket money and let them make the decisions around it. That is where you start to teach delayed gratification. Of course, you don't use that terminology to a 6-year-old or 7-year-old, but, the decision whether to buy 26 bottles of nail varnish, they were only 50 pence each. They were in a bargain bucket, and completely blow everything she'd got on her card. And then she realised that tomorrow she couldn't go with all her other friends to the cinema because she'd blown all her money. And that's a true story. I mean, bless her, she knows I trot this story out so many times. And as a mum, how hard was it not to stick my hand in my pocket and pull out a £10 note and say, oh, go on, it's all right. But I didn't. And she disappeared off upstairs, came down an hour or so later and said, asked me how much money I paid to get my car cleaned. And if she cleaned the car, would I pay her that? And could she go to the movies?
Wow.
Do you know
you got a clean car out of it?
I got a clean car out of it. And do you know what a great lesson, and that sounds quite serious, but that's why it's important to let them make the decisions with the money themselves.
That really shows a kind of level of sophisticated thinking to think, well, now I have this problem and how do I solve it? I solve it by working and doing something for someone that they don't want to do themselves or can't do themselves. And so they would pay me for it. I mean, to me, that seems like a really good financial literacy story. And it makes me wonder how then GoHenry addresses this issue of sort of chores for earnings. Is there some way that parents can easily show their children that, when you do X chores, I put in the money, or do kids just kind of see the money come in and have a hard time, connecting it to the chores that they've done?
It's interesting. Chores, tasks and chores. Parents have a really Marmite reaction to that. So some parents feel passionately that kids should help around the house anyway. They're part of the family, so they should help around the house. That should not be paid in any way, shape or form. It should just be expected. And others use it actively to teach their kids about earning and the value of money. And I have to say, I fall into the second camp. I did use it with my kids. I paid them a base pocket money, but then I set up, using GoHenry, we let parents either set up some of the most standard chores, but we also allow free text chores to be set up, and the parent to choose how much they want to award to the child for that. And again, it is a really powerful tool to teach kids the value of money, that how hard you have to work to get that money, and that it to use all the old phrases, it doesn't grow on trees. It doesn't just come out of your phone when you tap your phone. You have to go and earn it first for it to be available on your phone. And if there's a way for kids to learn that really young, in a way that's meaningful for them, which are things like tidy your bedroom. Or, one of the lovely ones I remember reading was, tidy your bedroom, my tidy, not yours.
Yes, as a parent, I totally get that. Yeah, in another episode, we've talked about how, the paper route is dead as a way for kids to earn a little bit of money. And instead, there is this creator economy that is blossoming up in, various gaming environments and other places where kids spend time online. And I can imagine the situation where all of a sudden, if a kid becomes really quite adept at making that kind of money without the financial literacy foundation, they could make some choices that maybe they would regret later on.
Yes, and we absolutely see that creator economy happening with GoHenry Kids. Every so often we release what we call the Youth Economy Report. We have the biggest database in the world of information on how children use money. And the shift that we've seen over the years that we've been producing the Youth Economy Report, the shift in behaviours and the shift in how children are actually, the choices they're making and how they use money, and also where money comes from, are fascinating. And yeah, absolutely, that creator economy is growing. I think in it wasn't in the most recent Youth Economy Report, but the one before, we talked about bedroom businesses. And we see kids as social media influencers. You mentioned gaming. There's kids earning money from gaming. There's also a huge group of children setting up their own little businesses. What's now become known as a side hustle, but making things and selling them, or reselling things. And that's amazing. That's again, what a learning experience to be able to do that and learn to manage it properly.
So tell us more about the kinds of roles that parents play on the app. What can parents do to help their child beyond just providing the app for them and then supplying it as needed?
Really, it's totally flexible for the parent to set it up the way that they want. We strongly encourage them to set up regular pocket money or allowance for the children, really because we fundamentally believe that's where the thinking about delayed gratification comes in. They know that that's going to come in every week, and they can then make decisions on, am I going to blow that on sweets today, or am I going to save it? But then we talk about the 4 pillars of money management: earning, saving, spending, and giving. And earning extra income by completing tasks, spending, children can spend in line, on store, contactless, with a PIN. If they're over 13, they can take cash out at an ATM. Parents can decide which of those, if they want to switch one of those off, they can do. And they can set limits as well, single transaction limits, weekly spend limits, so that they are comfortable. And then savings, the children can set up savings goals, and they can choose to auto-save, so put away a little bit of their pocket money every week, or they can just top it up when they want to. But there's lots of encouragement to hit that savings goal. And if they put away money every week for a number of weeks, we talk to them about savings streaks and how close they are and how many weeks to go. It's all about understanding that delayed gratification, and also to appreciate once they've spent the money, it's gone. And I should say as well, with our Plus membership, so in our Plus tier, we offer a 4.5% variable interest savings account. So kids can actually put money in there, and as soon as they've got somewhere in the region of 30 to 40 pounds saved, we pay interest daily. So literally every day or every 2 days, they see a ping, you've earned another penny, or you've earned another 2 pence, your new balance is. And then finally giving, the fourth pillar. When we launched, we didn't have that, but we saw just how many kids were already donating to charity, and kind of reflected and thought, do you know what, that's actually also a really important thing to teach kids about, that money gives you choices. And one of those choices is to be able to help people who might be less fortunate than you. So we introduced a giving pillar, and kids can donate micro donations, so anything from 2 pence upwards. In the UK, it's to the NSPCC, which is the National Society for Prevention of Cruelty to Children. And in the US, it's with the Boys and Girls Club of America. And it's been amazing to see just how much money. I think our average donation in the UK is 7 pence. But we're sitting at something like £600,000 has been donated to the NSPCC in the last 4 years.
Wow. That's really amazing.
That's the power of children.
Yeah. And the power of every penny counting, essentially.
Yep. Yeah.
So can you tell us about the role of Visa Direct with GoHenry? What does Visa Direct enable? How does it make GoHenry better?
Well, I have to say Visa has been a partner, I won't even say since day one, since pre-day one, right at the beginning when there was me and 2 other parents trying to figure out what did we need to build and how did we need to build it, and then how much money did we need to build it, and how did we create a sustainable business out of it. We managed to get through the door of the head of innovation at Visa, or the gentleman who was the head of innovation at the time, and really found a great sounding board and a huge supporter. And he introduced us to the rest of the teams at Visa, and Visa was really supportive about what we wanted to achieve. So they've worked with us ever since then. To start with, it was giving advice and showing us, teaching us all kinds of things so that we could figure out what to build and how to build it. And also, I think for a new, totally unknown brand launching a new product that didn't exist anywhere else, having a global name like Visa as a partner and happy to appear on our website saying this was a Visa card and that we were partnering with Visa, gave credibility and gave parents confidence that we were a service and a brand worthy of their trust. So that's been a huge part that Visa have played. But Visa Direct particularly, I think the key element of that is the real-time capability. A lot of what we do, a lot of our features, a lot of the elements of our services are real-time. I talked earlier about real-time notifications, so that, if your transaction fails when you're stood at a till point somewhere, we send a notification to say, hey, you put your PIN in wrong, or you don't have enough money, or that's real-time. Equally, for us, it's critical that parents can get money to their children. If it's a young child, an 11-year-old, trying to get on the bus to get home from school and they don't have enough money, It's massively important parents can get money to their kids straight away. And Visa Direct allows us to be confident that we can help parents to do that.
So we talked about markets in the UK and the US. Does GoHenry have products in other markets, and are they all called GoHenry, or are there different names?
We do have products in other markets. So in the UK, we're called GoHenry. In Europe, we operate under the brand name PixPay. So we acquired PixPay, which is a French FinTech company, in June 22. They're mission-led, just like us. Education is a core principle of their services. And similar to GoHenry, parents can set up automatic pocket money, they can manage chores, they can monitor spending through the app. Same aims and mission as us, but their primary focus is on teens. So across France, Spain and Italy at the moment, they start at age 10 and then carry on a little bit later than us. They go 18 and slightly beyond. In the US, we're now known as GoHenry by Acorns. We merged with Acorns at the beginning of 2023. We really realized that our services complemented each other perfectly. We were both pioneers in our respective areas, both been around 10, 11 years. And now that we've come together, we're able to deliver financial wellness to the whole family. So the goal there is to empower people to manage money through all of life stages. It doesn't matter whether they're 22, 42, 62. There are services there that we're able to offer with that same educational and informative, easily accessible approach.
Let's talk to Kennedy again to learn how financial literacy at all ages is a key part of the Acorns mission.
Our mission from the beginning is to look after the financial best interests of the up and coming, beginning with the empowering, proud step of microinvesting. And when we wrote that mission, when we kind of visualized what that mission really stood for, it was about how can we make it as easy and accessible, right? That's the microinvesting part. For the up and coming, meaning anybody who is trying to grow, desires to grow in their lives, financially, for their families, how can we make it as accessible as possible for everyday Americans to grow their wealth?
And what are some of the features that Acorns provides that really are innovative and in terms of the financial inclusivity space?
My favorite, and when you talk about the trip that we were on, this came into play every day, multiple times a day, is one of our original features, which is Roundups. And Roundups is offered in every subscription tier we have. So with Roundups, you can invest spare change from everyday purchases. So, you spend $1.50 on something, we round it up to $2, and that 50 cents gets invested in a diversified exchange traded fund. And then as kind of in addition to Roundups, we have recurring investments, which I mentioned before. You can kind of set up a recurring investment in your future. On top of that, there's Acorns Later, which is our retirement account. It's an IRA. And we kind of take out all the kind of complexity of deciding which IRA you should get and help you by recommending one that's right for you. So really, as you can tell, like the whole system is just about making it as easy as possible.
I can imagine how some of these features interact with sort of the power of habit and how our brains work, because there's a lot of nice research suggesting that we tend to underestimate our future selves. We tend to sell ourselves in the future short by focusing on our present self. I mean, that's why it's so hard to, save money or, avoid the temptations of things that are right in front of us, because we tend to discount what meaning it'll have for us in the future. And it sounds like some of these features are kind of designed to thwart that potential problematic human behavior. And instead allow you as your present self to say, hey, it's not such a big deal if I round up this, 50 cents and really kind of prioritize your future self over time.
Yeah. I feel like this should be I should be picking your brain about exactly that topic, because, I mean, you really nailed it. Like we are and have from the beginning, particularly again through education, financial education, trying to educate people and empower people to create new, good money habits. And that's why with products like Acorns Early and GoHenry by Acorns, it's so important and right in the palm of your hands to get started as early as possible. I always tell people, if I waited until my kids were in college to tell them to eat vegetables, it would be way too late, So I'm trying to kind of instill those good eating. It's not always easy. Money is a language. The earlier we can speak that language to them, the earlier they develop those good habits.
So have you noticed any differences in financial literacy in different regions of the US or North America? And if so, do you use that to inform your approach to potential customers in those regions?
We try to answer that as best as possible by usage, and Acorn's usage and kind of our consumer base is really spread pretty evenly across the United States, and their activity in the app is spread pretty evenly across the U.S. We know from the Money Matters report that almost a quarter of Americans feel that they were not properly financially educated, if financially educated at all, in their school years. And obviously know that that's a huge problem. And then an even higher number of those feel that if they, had more access to financial education early on, they would be in much better financial situation now. So I think those are the commentary, that's the feedback that we really listen to in trying to, number one, provide as much financial education as possible, make it as accessible and interesting as possible. And then number two, make the tools that Acorns provides as accessible and easy to use as possible. So there's really no barrier to entry for anyone.
One of Visa's major goals is to make the financial world accessible to people through enabling money movement that's fast and easy and reliable. How do you see the impact of some of these strategies that you've described, where you're allowing people to take their spare change and invest it, furthering this mission of inclusivity? Like, do you have any success stories of people who have suddenly noticed that these kinds of even little tiny habits matter? Or have you seen those habits grow into ones in which now they prioritize saving in a way that maybe they wouldn't have before? How are you defining success in terms of that particular aspect of how you approach inclusivity?
Yeah. Well, when you look at the mission, again, it's not a poster on the wall. It's not a marketing tool. That mission is core to everything that we do. It's in everything that we present. We start with our mission. I think it's kind of in the fiber of who we are as a brand. And the reason that we believe in it so deeply is because when you give people financial education, access to investing, you give them an opportunity to change their lives. I remember one story about a woman who found out that she had cancer, and her Acorns account was how she was able to pay for her treatment. We get a lot of stories from veterans who didn't have a financial nest egg before they left and came home worried about how they were going to start one, coming back and saying, oh my gosh, I can plan for my retirement through Acorns later just by kind of automatic distributions of, $10 a day or whatever they're able to accommodate people who didn't think that they had that option. So I think, core to everything that we do is how are we serving everyday Americans as effectively and inclusively as possible. So
one of the things I've noticed in how you're branding your different products is that there is it's a bit fun, right? I mean, Acorns itself is a term that, it's cute. It's associated with like forests and squirrels and cute little things, but it also obviously has an additional meaning. Yeah. Woodland creatures. You've got In a Nutshell, clever title for a newsletter. You've got the Mighty Oak card, which has its own connotations. What role does fun play in terms of your approach to financial literacy?
It's so important, because if it's not fun, you're not going to do it. It's like back to your point about habit forming. It's make exercise more fun, and people are more likely to do it. Whatever fun means to you, it's bio-individual. But yes, we are really trying to make not just fun, but make money part of our everyday conversation. Let's kind of stop talking about how we don't talk about money. And let's become a culture that does talk about money. Let's share our money wins with our friends. One of the kind of core brand directions for Acorns is let's make it fun, let's make it comfortable. And that includes, by the way, the mishaps. My husband and I try to be really open with our kids about, we're not going to do this particular thing because, it's this because of this money situation. Or, let me tell you about this time that I did this and how you can learn from that mistake. I mean, if, as my oldest, especially just because he is the oldest, gets older, I can't wait to tell him that somehow, when I was 22, I was bouncing checks and, I became Acorn's chief education officer. My 22-year-old self would never believe that was the case. So we want to make it really clear that in a fun way, like you mentioned, that it doesn't matter where you start. It doesn't matter what you know. You can grow.
Thank you for listening to Money Travels. And thank you to our guests, Kennedy Reynolds and Louise Hill. If you've enjoyed this episode, please follow and subscribe to the show and leave us a review so that other people can find it. Until next time, I'm Indre Viscontis, and this has been Money Travels, presented by Visa.